Hey traders, Akil Stokes here, and welcome back to another episode of the Trading Blog. It is Tuesday, January 30th, and it's been a pretty good start to the week. If this is your first time joining me, my name is Akil Stokes. As mentioned before, I am a full-time Forex trader as well as the head trading coach over at tradeempowered.com. By the way, if you guys have been following, you know I've been teasing about a massive event that is coming. Well, the link is right below this video. So if you want to sign up for this 3-day big trading event and get yourself some free education, make sure you click the link below and reserve your seat. It will not be recorded, so you're going to want to be there. But it's been a great start to the week so far. I've taken 3 trades. I've had winners on dollar Canada for 2 targets. I had a winner on Aussie Canada for 2 targets, and I'm currently sitting about 20 pips down in a pound dollar trade right now. So not so bad. At least we know there's going to be 2 winners out of the first 3 trades, and getting multiple targets hit is always a good thing. Now, on the bad news, I did miss a pretty good trade on euro dollar yesterday. A lot of the traders I work with were teasing me about it. They were shooting through. We have this private chat, and they were shooting through it. Long euro dollar, and you know what? I was too busy prepping for our Q&A session, which we have each and every Monday, and I didn't have a chance to take the trade when it initially got triggered. And it was one of those trades. It was a pain-free 2-target winner. Never came back to entry. So I had some entries waiting there, seeing if we got a retest, and unfortunately we didn't. So I did miss that trading opportunity, but again, Mondays are typically the days I'm worried about prepping for our training session and not too much worried about trading the markets. It's part of the negatives of being a trading coach. But speaking of our Monday Q&A, we had a very good session. We were working with traders, working with a trader about the differences of not only doing analysis, but setting up your trading business on multiple time frames. And to make a long story short, my advice is always that you should determine what type of trader you're going to be, whether it's a swing trader or a day trader, and also what type of time frames you're going to work off of. I don't think it is good to bounce around too much. There's a lot of inconsistency with people that maybe one day trade the daily, the next day trade the 3-minute, then the other day trade the 60, then one day trade the 15, and they're all over the place. It's a lot of our strategies, a lot of our systems, a lot of your results as a trader is based on your edge, and your edge is based off of you doing a consistent thing in the market day in and day out. And when you start to bounce around to different places, you're not really being too consistent. So we did a lot of work on, hey, should I be a swing trader? Should I be a day trader? Or how can I break that up? And I do think you should choose one or the other. However, if you do have a lot of time, and choosing one or the other is based off your livelihood, what do you have time to do? Many of you don't have time to be day traders because you're working a full-time job. So you go more to swing trading where you have more time to look at the markets. You can kind of do it on your leisure instead of actively being in front of your computers for however many hours a day. But if you are a trader that's going to do both, I do recommend breaking them up in a few different ways. First of all, mentally breaking them up. The mindset that you have for swing trading should be completely different from the mindset you have from day trading. And there could be a little bit of crossover in between, but essentially what you're looking at on the 5-minute chart, for example, is really going to have zero to do with what's happening on the daily, or very rarely will it. Now, you could do some things like using that swing trade analysis to shoot for extended targets when you get a little bit advanced, but to keep things simple, just because something is saying this on the daily doesn't mean you can forego an opportunity on the 5-minute chart. You got to think of them as 2 different stories. And I also recommend that if you're going to do so, trade them with 2 different accounts. I always share this story. This is how I learned this lesson the hard way. I'm a swing trader and a day trader, so I trade the higher and lower time frames. I trade the 4-hour charts for longer swing trades, and I trade the daily or the 5-minute charts for day trades that I'm in for minutes to hours. And I remember this one story. I was in a longer term trade on the Aussie dollar. It was some advanced pattern formation. It was big targets, big stops, and I entered the trade. I got short, and I remember the Aussie just decided to chop and chop and chop. And what I mean was it went sideways, up and down, up 50 pips, down 100 pips, up 100 pips, down 50 pips, sideways, sideways, sideways for about 2 months. Now you can imagine the sideways movement on your chart, and What often comes from consolidation? Advanced pattern formations. I remember in our live room, our traders were going nuts. We saw pattern formation after pattern formation after pattern formation after pattern formation over and over again. And they were hitting target ones, hitting target twos, and our traders were going crazy. They were making a killing. I think there were 200 pips of profit to be made within that month time. Again, I was in this higher time frame trade for about a month doing absolutely nothing, just eating over my rollover cost. And although the lower time frames, the day trading time frames were making a killing, guess what this guy couldn't do, right? I couldn't be involved. Why? Because my position was already tied up in that higher time frame trade, right? So I just had to watch all of the profit being made, watch all of the excitement from all of the traders I'm working with. And yes, I was excited for them, but let's be honest, right? It's never fun when you're watching everyone else make money and you're sitting there saying, man, I should be doing this and I can't. And it was that kind of lesson, the turning point that showed me that, hey, if I want to be a swing trader and a day trader, if I want to be consistent with both, obviously I can just have two separate portfolios, but the best way to do it is to have two separate accounts, one for each, and that way you don't run into that type of predicament. So lesson learned. I got to share that lesson with a few traders yesterday in our Q&A and also as well today in the live room. So that's the lesson for today, guys. As always, thank you for joining. Do me a favor, if you're new, subscribe, go back and watch. I think this is episode 15. Go back and watch at least 5 of these trading blog episodes. They're short, they're sweet, and I've been told that there are some pretty good tips being dropped in each and every one of them. So subscribe, share it with a friend, and once again, below this video on YouTube and on the Trading Powered website as well is the link to our big training event coming up next week, coming up the week of February 7th. So reserve your seat now, and I will see you there, of course, and I'll probably see you later on this week with more episodes of the Trading Blog. Take care.